All right, good evening, everybody, and welcome to day 4 of our online Forex basic course. Today we'll be looking at other types. Okay, my name is Reke Obanobo, and I'm the administrator of Jfbc Academy. So this is day 4 of our online Forex basic class, and today we'll be looking at other types, TP and Excel calculation, then finally types of analysis. So without wasting much time, I'm going to be going straight to the slide now so that we will run through them smartly. Other types. So we have done all of these things we are running through now. Okay, so this is the pips and lots calculation. We've done this previously, but we'll just do it on the mobile today to have a clearer view and understanding. So this is where we are today. Order types. Order types. Types of order. Now, what is order? Order is when you place order. You place order for something. You want to buy something. Is it an instant buying you are buying? Or, in people like us, when we were as a salesperson, I was a salesperson, managing salespersons for BlackBerry. We used to pre-order, all right, when a new device is about to be launched or is launched. Before it's launched to the general public, we do pre-order, people pay for it. So all of those things are order types. So those ones are, here we have such two order types. So now we have instant execution and we also have pending orders. So in the pending orders, we have the sell limits, buy limit, sell stop, and buy stop. Okay? So all of these are order types. Take note again, the first one is the instant buy. So you can call it market execution. You can call it buy by market. All right. Instant execution, buy by market. Okay. And instant execution, buy by market, and you can buy at the current market price. A different name, but that one you just entering the trade at the current market price. That's as you click, you are buying or you are selling. But the limit order, that's the pending orders. Those pending orders do is you want the market to bring you want the market to bring you want the system to bring you into the market at a particular price. Either the price is below where you want to take the trade as at that time, or price is above. So that determines whether you are doing sell stop or buy stop, or buy stop or sell or buy stop or buy limits. Okay, so we have buy stop, we have buy limit, we have sell stop, sell limits. So it depends on where the price are per time and what you want to do. So when the market price gets to that level, the system will trigger your trade and it will put into the trade and the trade will start running. We'll be doing all of that as an example, okay? So right now, it's okay. Top order, why did it say? Okay, so now, okay, let me see. Limits and stop orders. Wait, let me check something. Okay, so all right, so let's look at these other types. Stop orders threshold has to be stop orders are threshold that has to be crossed only before one enters into a trade. They are like a race. Once one crosses a threshold and enters into the new race, e.g., buy stop and sell stop. So those are stop orders. So we also now have limit orders. So let me give you an example of the stop order. Now, buy stop is like we're in Port Harcourt. I know we have more than, it's not just Port Harcourt people that are on this call, but for me who is in Port Harcourt, and if you're in Port Harcourt, so let's assume you want to get to to my one pack and you are in Element Junction, you know that you are going to my one pack, you can actually enter the vehicle from Element Junction and start going to my one pack. But you said no, you don't want to enter vehicle from Element Junction. From Element Junction. You are saying that you want to find your way to Rumola. If you're able to get to Rumola, that's when you should enter the vehicle that is going to my one pack. Okay? So now, what it means in this case is that the price is ahead. Okay? So let's use buy stop for instance. Buy stop, the price where you want to enter the trade is at $10, but the market is currently at $7. So what you are saying now is that you put your buy stop at $7. So the market is buying. When it gets to the $7, it will not trigger your trade and you will start buying. But if the thing did not go up to that $10 before it pulls back, it will not trigger your trade. But if the market is able to, so why did you do that? You did that because probably you saw that there is too much traffic between Rumola, between that Element Junction and Rumola. So you just believe that if you're able to cross Market Junction, and gets to Rumola, the movement is free, straight down. So that is the reason for the stop order. So it's the same thing for sell. So you are selling, the price is at $10. You don't want to enter at $10. You want the price to come to $7 before the market trigger you and take you into the trade. So that is just the cheapest example for sell stop and buy stop. Okay, so that's for stop order. So let's look at the limit orders. Limit orders, these are threshold that has to be crossed before one enters a trade with expectation that price will turn around. They are like boomerang. Price has to go one way before it goes to the other. Up before down or down before up. Example are sell limit and buy limit. Don't worry, these are jargons, but by the time you begin to see them on the chart, you will appreciate it. But let me just paint a picture the same way I've painted a picture of the stop orders, which is buy stop and sell stop. Now in this case now is limit order, which is sell limit and buy limit. So now in the case of buy limit and sell limit, so now price is at $10, but you don't want to sell at $10. Price is okay. So buy limit. Let me start with buy limit. Price is at $10. You don't want to buy at $10. The price is coming down. You expect that if the price comes down to like $5, if it triggers you into the trade will begin to buy from there. So you now put your entry price at $5, waiting for the market to come to that $5 and trigger you into the trade for a buy. So if the market move and it actually reverse from that place and start buying, your trade will go well in profit. But if the market reach that $5, it will trigger your trade and your trade will enter into the market. But if it happens that it continues to sell, it will put you in a negative, and if it may hit your stop loss or put you in a very long drawdown. So if you have stop loss, if it gets to that stop loss, it will hit you out in a loss. Okay, so that's how buy limit operates. The same is the reverse is the same for sell limit. So for sell limit, the market is For sell limit, the market is buying. You don't want to buy at the current market price. You believe that the market should still go very up before you enter the trade. So you put your entry above the current market price. So when your entry is above the current market price, if the market gets to that place, it picks your trade and trigger your trade. So the trade will execute. If the market decide to come down from that level, your trade will be in profit. But if you continue to buy, you're already in the trade and you begin to build negative until it gets to your stop loss and hit you out. Or if you have no stop loss, it will now put you in a drawdown. If your account cannot withstand it, your account is gone. So now let's look at each of them. Let's look at each of them. So I just did all of those explanations so that you have a better understanding. It may not sink now, but over time it will begin to make sense. So let's look at the pending order. Let's start with sell limits. Listen, this means placing order above entry price. Price climb higher before it turns around to fall. Okay? Then buy limit. This means placing order below the market price. Price goes lower before it turns around and rises. The next one is buy stop. This means placing your order above market price and price keeps going up. Okay, price keep going up. That's it. So when it hits you, when it puts you in, the price should continue to go up. That's what you want. But for some reasons, you did not enter at the current market price. You want it to get to a particular level before you be able to enter. So that is how that is. The same thing for sell stop. This means order placed below market price and price keep order sell stop. This means order placed below market price and price keep going down, not up. This is down. This is down, not up. Okay. All right. So, calculating stop loss. But before we calculate stop loss, let me log in through my phone, my mobile, so that we can demonstrate the sell stop and buy stop on this phone. Okay? Sorry, I'm trying to log in from the phone again. What's wrong with this network? Trying to log in, just hold on. I think the network is
Recording in progress.
all right. So I tried to disconnect audio so that this will not affect anything. So now I'm going to stop share here. Let me start sharing on my phone. Okay. Okay. So let me share my mobile. Share screen. Entire screen. All right. So this is my mobile interface. Okay, so right now, I believe you can see this screen. Okay, there is a way you do it on your screen. It has to be full the way this is full right now. Okay, so you see this account. This is a demo account, okay? I have to do this on a demo account so that we can use it to practice, okay? So right now, Normally, you want to take a trade. There are different ways you take a trade. This is a pro account on well trade. This is a pro account on well trade. So now you want to take a trade. So you see this here, this plus sign. That plus sign, you can click on it to take a trade. So let me click on it now. So have you seen what happened? Now, can you see the screen? Look at the bottom. You see sell by market, buy by market. Sell by market, buy by market. Now, if I click sell or buy, what it means is that I'm either selling at the current market price or I'm buying at the current market price. But let's look at three key things. Now, this is practical right now, so please uh, pay attention. Now, the first thing you want to make sure you take note of is this. I just circled your lot size. Now, before we go to PIP and loss calculation, we are going to be doing all of them together in this buy stop and sell stop now, other types now. So right now, this is the least lot size on Forex, 0.01. So depending on your account size, you want to increase it, you can just place your hand and you type. So let me, okay, but let's leave that. Let me show you the next thing first. So the next thing is this dollar sign here. Now, with this dollar sign that I just circled now, with this dollar sign, you want to change to the asset or the pair that you want to buy or sell. That should be the first thing, okay? Because right now, the chart is on AUD USD. AUD USD. The chart is on AUD USD. Then you want to change it, you click on this dollar sign. So let me remove this now. Delete and stop animation. Okay, so this is how just any notification that comes into this phone, it will block the screen of the screen I'm sharing. Okay, so now I'm clicking on the dollar sign now, clicking on the dollar sign. So can you see it has brought out the list of assets, the different pairs. So let's assume I want to trade gold. I click on gold. Gold is XAU USD. I click on gold. So now, do I want to buy or sell? All right. Do I want to buy or sell? The next thing to do the next thing ordinarily is to check your lot size. Are you using 0.01 or 0.02? So let's assume you want to use 0.02. This is where you just type, edit it, and change it to 0.02. You want to do 0.1, the same edit, you edit it. All right. You want to do 0.01, that's the same thing. Before you now go to whether you are buying or you are selling. All right. So if you are buying, you click buy by market or sell by market. So that is for buy and sell. Now, can I show you something else right now? I hope we are paying attention. Now, this is something else. Now, you see this place. This is market execution. This is when you click buy and sell anyone for instant execution. So you can call it market execution, instant execution, buy by market, all right, or buying at current market price. Okay. So when you look at this place I just circled now, to the right, there is a drop down. All right. There's a small arrow drop down there. So you want to click on the drop down. So I just click on the drop down now. Can you see the list there? You can see buy limit, sell limit, buy stop, and sell stop. Okay? So now let's look at buy limits. Buy limit is you want to buy at the current market price. I mean, the buy limits, you want the market to go down. You want to buy below the current market price. That is buy limit. You are buying below the current market price. So now the current market price now, this price is this one moving left and right, changing from green to blue, blue to green, I mean to red, red to green. That is the current price. Okay, so it moves up and down. It does not just go straight in one direction, but overall is where it's going. Okay, so right now the current market price is 41880. Okay, or 889, call it what it was. So for you to be able to enter this trade for sell limits, you want to make sure that, okay, this is buy limit. For buy limit, you want to make sure that your price is below this current price. So let's say we are doing our sell limit at 41 4184.55. Now, can you see that the place is highlighted to place order? So when I click place now, the order will be placed. So let's okay. So let me place now. I'm going to click on place order now. Now this is take profit and stop loss. I have not put take profit and stop loss. I just want to enter the trade first. But if you have all the parameters, you can enter all of them at the same time. But I just want to show you so that you know if you are putting this parameter, all of them at the same time, if anyone is not correct, this place will not highlight. If any of them is not correct, this place will not highlight. So let me place this order now. You can see the buy limit has been placed. Can you see the XAUSD is placed, is under, is showing on, or is showing under orders. The first set you see, that is positions, while the second level now is order. So orders will fall here. So if you have 10, 20 pending orders, all of them will be here. Then when the price gets to anyone, it will trigger and it will enter the market. It will now be under positions instead of order because it's running. Position is where you have running trades. Okay. So now let's go back to another trade. So you go to the plus sign at the top again and click on it. So are you buying or selling? So now that same buy limit we just did, I want to do the one that is not correct now. What I did was correct. That was why the thing went. So now this is the current market price. You want to do buy limit. And you go ahead to put price that is above what is running on right now. So let's say 4190.0. You can see that the place is not highlighted. The place is not highlighted. The place is not highlighted, so which means it's not correct. But if you put it again below the current market price, so let's do 80. Can you see that the place is highlighted already? The place is highlighted. So now, let's put take profit and stop loss. So let's say take profit is 4190.00 because we are buying. Okay? Then stop loss. Stop loss should be below the entry price. Your take profit should be above the entry price. Your stop loss should be below the entry price. So let's see something that is below the entry price. We can now say 4175. You can see that the place is highlighted. The place is highlighted. So which means you can place your trade right now. But let's now make a mistake on one of them. So let's say 4199. Can you see that the place has disappeared? So when you are taking your order and any of these parameters that is wrong, your trade will not place. You won't be able to place your trade because it will not highlight for you to take that trade. Okay, so this is for buy limit. So now let's go back again and do same for sell limit. Now, in the case of sell limit, it's just simple. Okay? What we have done on for buy limit is the same for sell limit. Now, in the case of sell limit, you want your entry price to be above the current market price. So this is 4185, right? 4185, then let's say 4190. You can see that it has placed, it's showing you place for sell limit. It's showing you place. So which means it's correct. Okay? So you click place. I have clicked on place. The order is placed, right? The order has been placed. So now let's go back again. I click on the plus sign, the same asset. Now, I have shown you the wrong one, so I'm not going there to put the wrong parameters and the trade will not highlight. Now we are going to buy stop. Now, I demonstrated something earlier for all of this thing. Buy stop is that the price, your entry price must be above the current market price. So the price is still at $7, but you want, if it gets to $10, that's when you start buying. So what you have instructed the system to do is that if the market gets to $10, trigger me into the trade and start going and continue your buy. So that is it. So now let's do buy stop now. So the price is at 4184, right? So buy stop, let's do 4190. You can see that it has placed. Okay? So for this case, because you are buying, your take profit should be above the current market, it should be above your entry, and your stop loss should be below your entry. Okay? I've demonstrated that before. So now let's go to sell stop. Now for sell stop, the market is presently at 4184. But you want it to still sell down before you enter. So you now place your sell stop at 4180. You can see that the place is highlighted. So when the market gets to 4180, it will put you into the market. So I've just clicked on place. Good. Our first order, one of the order has been picked. Now this was a buy stop, right? A bit buy limit. Okay, so the first trade we took was a buy limit. Now the market has come to that price, it has picked it. I don't know if anybody is seeing what I'm seeing here. The first trade, the first pending order we took was buy limit. So the price, our entry price was below what price was then, and the market has reached there and it has picked it. And is in profit somehow, but the trade has just begun, is in profit. Now, we also have done sell limit as well. Then this one has sell stop. So this is exactly how pending orders work. Okay? This is how pending orders work. Now, you want to learn better about pending orders. I have videos, but just go to YouTube and search, pending orders, in Forex. You will see 1 million videos. You just begin to tap them. Before you watch 3 or 4, you will see the ones that will resonate with you in terms of understanding. These things are cheap, but you need to pay attention. You need to, first is dedication, like I said when we started. You have to dedicate yourself to say, this is what I want to do. If that dedication is there, the zeal will follow. And if you know your why would be, why am I here? If you know your why, you have a strong why, that why will be driving you. So you'll be learning all of these things seamlessly. Okay? So that is for other types. So now the next thing we want to look at is pips calculation. Pips calculation. Okay, pips calculation. So now, for this screen first, you want to calculate your pips. You want to calculate your pips. Okay, another thing I need to show you is to go to this chart. Now, how do you go to chart from here? Okay, so take for instance now, this is charts here. Okay, this is quote. The quote is where you have your list of instruments. All right. Trade, this is the trading window where you have always interacted with. This is history. This is history. The history tell you, it shows you close and open trade. I mean, close trades for a particular period, either for that day, for the past 1 week, for the past 3 weeks, for the past 1 month. All right. And you can also do custom. Custom, which means you are going to specify the date, the period, the start date, and the last date. And you will select, it will give you the history. Okay, so let me just go there to show you how it works. And I also go to the charts and the quote before we continue. All right, so let me go to the history. Now, this is the history. Here, there is no history. So, why? Because it's on today. It's showing you today. So, today, there's no history. Let's see last week. Last week, there's no close trade. Let's see last month. Okay, so last month we closed a trade in a loss at $29. So let's see last 3 months. So last 3 months, if you from when the account was open till now, the account has made $123. So this account was open on the 11th of May 2026. And between that time and this time, it has done $123 profit. So this is how you look at your history. So let's go to the charts. Now, the charts is actually where you do your analysis. Okay. Now you can also do buy and sell here on this chart. So let's look at here. You have a button that is called this button, one click. We call it one click button. This buy and this sell, we call it one click button. Now, this one click is very dangerous for newbies because if you don't know how to use it, any small touch, the thing will just be picking trades for you. So now you see this rectangular box on top that I just circled. That's the one to close it. So you want to make sure that it's always closed so that the system does not erroneously put you into a trade. Because most times the thing will be in your pocket if this chart is open and this thing is open, you can be working and this thing just begin to take trade. You can also leave it open. You are just scrolling and the next thing your hand touch buy or sell, you may not even know. So you want to always make sure it's closed. So let's so now let me first of all close it. So I click on this small rectangular button on top. Bah, it is closed. It is no longer there. Okay. So why the chart? This is where you do analysis. You will come there. So the next thing would be PIP calculation, but frankly, I'm really very tired right now, and I'm not sure I can continue. So tomorrow we will continue. We'll do that PIP cal. We've started the PIP calculation before. So tomorrow we'll do the PIP calculation. We'll do the other type. Other type is, in short, let's do the other type and leave PIP calculation. PIP calculation, we'll use it to start tomorrow. So let me just run through the types of analysis. Okay? Let me run through the types of my analysis. Let me stop share here. Let me stop share. Okay. So I'm going to be sharing from here again now. Okay, so types of analysis. Now we have three types of analysis. We have technical analysis, we have fundamental analysis, and we have sentimental analysis. Three types of analysis. The technical analysis is simple, is the use of the chart, okay? Now, remember the day we did trend line, we did trend line, we're drawing trend lines, we did support and resistance and all of that. All we were doing those trying to look at the market direction, trying to look for where to enter trade. All right, that is called technical analysis. So technical analysis, this is used by traders to study price movement. Traders study historical price movement in order to determine where price would go. It is used to study historical price movement in order to determine where price could go. Okay, so these are technical charts. So you can see all of this drawing, okay? All these are technical, all right? It's just the term. So your analysis, what you draw on the chart, you want to draw support and resistance, you want to draw point of reversal and all of that, that is technical analysis. So let's see the next one. The next one, fundamentals. Now, fundamentals is actually um it involves political. Okay, so this include political, social, and economic news to gauge how the market will do along with the country's potential economic outlook. The performance of a country affects the outcome of the currency of that country. Now, we have major currencies. Now, those major currencies that you know that you have, they feature on what we call economic calendar because their economy has standard. So there are different data that are measured from the economy, ranging from interest rates, okay, GDP as in gross domestic growth, uh, gross domestic growth. All right, that's GD what? Gross. Okay. G. Okay, gross GDP is GDP. Okay, then we also have political. All right, now what are political news? Political could be maybe elections or statements by the president or maybe lawmakers of that particular country. Things about the politics of a country may also affect the economy. So all of them have role to play on fundamentals. So now you can't trade forex without fundamentals. If you look at only technical alone, with just one news that will come out, boom, the the all your analysis that you analyzed before, because of the news will alter your analysis and things will begin to go the other way. But if you look at the two together, you are able to blend the two and trade with both your technical and fundamental skill. Definitely you'll be profitable in the forex market. Okay, so there are key indicators that we use for fundamentals. One of them, which is the most used, is called forex factory. It's called Forex Factory. What Forex Factory does is that it's an economic calendar. It shows you the news, when the news is going to come, the outcome of the news. All right. So the news, it will tell you maybe in 2 weeks to the news, you already have it on the calendar. Is to tell you the date that the particular news is going to, we expect a particular calendar news. And when the day finally come, when the news comes out, the same place will give you the outcome of the news, and it's called Forex Factory. So we also have Bloomberg TV, all right, and Bloomberg.com. We have the currency strength indicator, various economic calendar. There are plenty, but the most popular is the Forex Factory that almost every Forex trader uses. Okay, so the next one, which will be sentimental. Sentimental is basically the overall feeling of the market. This is what people think, all right? What you and I think. Are we to buy or are we to sell? You have more sellers, and based on the just take, for instance, a political outlook. Let's say during the US election, you have people who are for the Democrats, those who are for the other party. So right now, and you see at the end of the day, if the side that win, the people who are for that side, if they are more, that sentiment, okay, that sentiment will also be able to tell that, okay, this is where you have more person. So now on sentimental analysis, you can also have it that the strength is either neutral, negative, or positive. But sentimental analysis is not really a big play. But during elections and some key political events, you want to look at sentiment, because sentiment can play a role during those major times. So sentimental analysis, this is the overall feeling of the market. It emphasizes on how people respond to news and how that shows up in the market. Example, people respond to the US election and how that will affect the market. It is basically the people's feeling about the market. Okay, so there are also some key indicators that shows you the sentiment of a particular pair or a particular currency. Okay, so these are this one. So this is where we draw the curtain. This is where we draw the curtain today on our today's session. That's sentimental analysis, fundamentals, and sentimental, fundamentals, and technical, which is the three basic analysis under types of analysis. Thank you. So basically, I'm going to be stopping share now. I'm stopping the recording so that I need to stop the recording so that we can ask questions, because if we add recording to questions to the recording is usually very lengthy. So we'll stop recording, then let's ask questions for the next 10 minutes, and we'll call it a night. Good evening.